Hi guys, Lee Gettess here with the Market Sense for the week of December 18th, 2012. The charts I use come from the Trade Navigator software. First chart is a weekly bond chart, and you can see bonds have started to break down pretty good here. It's kind of hard to know how much of a breakdown you'll get in a market that's being supported by the Fed, but we've had some downturns, and this looks like a pretty good one. They've broken all kinds of support here. They came off of this 148.10 area here, and heck, even if they get up to 149.12, they still look relatively weak, but they've broken down through everything. It looks like they're targeting this previous swing low here in the 145 area, and there's nothing to say they can't go down to 143 or even down to the lower Keltner channel here, 142. It's all very possible. It's also possible, since they just in the first 2 days of this week have pretty much equaled the normal weekly range, it's also possible that they'll just take the rest of the week off. Just not a lot to say here other than they look weak. I sure don't want to buy them for any reason, even if they do go up. Now, stocks, we have a completely different circumstance, because stocks, after making this low in November, have done nothing but go up, and it's a very orderly, nice, steady progression higher, like with just no backup. Not a lot of volume, but still no backup. And they're up strongly this week through all of the resistance. You can see the red line, blue line, bloom, they're just still going. If you drew a little trend line, it would come in matching this congestion area at the previous high here. Let's call it the 1450 area. That should be resistance this week, but boy, I tell you, it basically took them 8 weeks to come down from this high in September. They went down for 8 weeks. They're only up 5 weeks so far, and they've almost recovered all of what it took 8 weeks to go down. That's usually a pretty good sign of strength. Now, that doesn't mean that they can't fail before making new highs here. It doesn't mean they can't make a marginal new high and then fail. Those things are both possible. But at this point, they look pretty strong, and it looks like they might just rally into the middle of January, provided you can keep Harry Reid off of TV. So that's all we've got for you today, and that's probably the last time you'll hear from us for a couple of weeks. The holidays fall in the middle of the week, both Christmas and New Year's, so there's probably not going to be anything for us to discuss or do. So probably be the second week in January before we're back in touch with you. Thanks for checking in with us.